So we got to talk about it. And this video really pains me because Batman is one of my favorite comic book characters of all time. Make no mistake, I do have an emotional attachment to Batman and the comic books that he is featured in, whether it is Detective Comics or his own series, the Batman series. So for those unaware, Detective Comics 27, graded in CGC 4.5 condition with tanned off-white pages, recently sold through a Heritage Signature auction on Thursday, June 20th, 2024 for $675,000. Now make no mistake, if you don't follow the vintage comic book marketplace, that seems like a lot of money to pay for the first appearance of Batman, which is what Detective Comics 27 is. It is a fairly scarce book. According to the CGC census, there are only 76 graded copies of Detective Comics 27 out there that were ever graded by CGC, and the highest graded copy in existence is a 9.2. Now, comparing this to Action Comics 1, which is also another scarce comic book, Action Comics 1 has roughly 80 copies graded by CGC in existence. So believe it or not, Detective Comics 27 is just a tad hair scarcer than that of Action Comics 1. Now this is important because what a lot of individuals are now coming to realize if they study market data, back on Sunday, January 16th, 2022, this same exact Detective Comics 27 that was graded by CGC in 4.5 condition with tan off-white pages sold through Heritage auctions for $1,140,000. This book, in 2 years' time, roughly, went from $1,140,000 to $675,000. This proves the point that there's no such thing as a guaranteed collectible. There's too much volatility in this market. There is no such thing as a blue chip collectible, as Harry Rinker once said. I know a lot of the Timmies, Kimmies, and Poindexters out there, the starry-eyed speculators, they love to cut me up whenever I talk about that, but then along comes a sale like this, where this individual thought he was making a wise decision by paying $1,140,000 for this scarce comic book, only to consign it to Heritage 2 years, several months later, and it sells for $675,000. Make no mistake, this person took a substantial loss on this book, and it doesn't even include the selling commissions that he had to pay Heritage for them to auction this book for him. So this is a massive loss, no matter how you slice it. This guy got slapped in the face with a box, a full dozen, a baker's dozen, no less, of stale donuts. He's still getting hit with the stale donuts right now as we speak. This is a very painful lesson in the vintage comic book marketplace. Now, where am I going with this? Believe it or not all is doom and gloom in the overall comic book marketplace. And I want to make this very clear because everybody accuses me of just putting out video after video of negativity when it comes to the antiques and collectibles trade. For the record, I have a vintage comic book collection worth close to 6 figures at present time. I report the truth on this channel about any of these markets. What I am going to tell you is, as we just saw, with the high price point being paid for an Action Comics 1, graded by CGC in 8.5 condition, that sold for a record-breaking price of $6 million, there is a lot of smart money that is slowly flowing back in this market, but it is acting in a more cautious and intelligent manner. Gone are the days during the COVID boom when the government was giving out free money that you could get $10,000 for a copy of Amazing Spider-Man 300 in CGC 9.8 condition, or heaven forbid, close to $20,000 or more for an Incredible Hulk 181 in CGC 9.4 condition. Those days are over, my friends. They're never, ever coming back. And if anybody ever tells you that buying in to the top 5% of a specific collecting market contains no risk. I'm here to tell you there are no guarantees in these markets. I have done other videos showing you price crashes of this magnitude that have taken place also in the overall vintage comic book marketplace, amongst others. Graded video games are a prime example, even individual Pokemon cards. I get into this argument a lot with the Pokemon crowd. Pokemon crowd comes at me and says, Sean, you don't understand. Pokemon cards are bona fide investments. They keep going up in value. If you look at the price that were paid during the pandemic for a lot of first edition WotC Pokemon cards, the coveted first edition cards that came out when Pokemon first premiered in PSA 10 condition, you're going to see those prices collapsed. They are not achieving high price points anymore in the year 2024. The individuals that look at everything with rose-colored glasses, especially when it comes to prices being paid for antiques and collectibles, should not be believed. If you are listening to these individuals, if you are watching any of these hype-driven YouTube channels, please only watch those channels for entertainment purposes. If you act on the advice they are giving you, in most cases, you are going to end up slapped in the face with a stale donut. And heaven forbid, you don't end up like this guy that paid $1,140,000 for a book, only to sell it over 2 years later for $675,000. Do you have any idea, just in the opportunity cost alone, what this individual gave up? Could you would imagine if that person would have took the $1,140,000 and just put it in a money market fund, or heaven forbid, an S&P 500 index 2 years ago? You have any idea what that $1,140,000 would have grown to? Instead, he chose to put it in a comic book when prices were at all-time highs. He went to sell it in the year 2024. And guess what? I hate to say this, but the price is what it is. This particular item is not the bona fide blue chip investment that a lot of you guys think it is. And that's all I'm going to say on this, because there's way too much volatility in the market at present time. The money that is coming back into the collectibles marketplace is much smarter than it was back what we saw during the COVID highs. You guys need to realize this. A simple definition of volatility, because I know I'm going to get asked this in the comments if I don't answer this question. It's an investment term that describes when a market or a security or an asset class experiences periods of unpredictable and sometimes sharp price movements. And make no mistake, it doesn't always have to be downward price movements. It could also be sharp upward price movements. The antiques and collectibles trade is high risk. It has always been inherently risky. Again, a lot of you guys that came into this market right around 2015 on up, the whole collectibles market was on an uptrend. It was on an incline. As a result, there's a lot of people in the comic book marketplace, the vintage toy marketplace, the Pokemon marketplace. They think they're geniuses. When all this, what they did was they got lucky. We're all hoarding the same shit, guys. If you ended up buying Pokemon booster boxes from 2015 on up, you made money. You're not a genius. If you ended up buying a lot of key issue first appearance comic books in high grade right around 2016, 2017, and you held them and you sold into the hype during the pandemic, you're not a genius. You got lucky. You followed the market trend and you took my advice when I told you to sell into the hype. Same thing happened with graded video game collectors. The people that bought in on the trend at the ground floor and sold when prices were high, you guys made a lot of money. Myself, I'm included in that category. The problem is, too many people were buying when prices were high, thinking they were going to go higher. There are no guarantees in these markets. Remember, guys, investing in any type of antique or collectible is based on the greater fool theory. There are no underlying cash flows here. If you're buying an item like this, you are pretty much betting that at some point in the future, when you go to sell that item, whether you sell it privately or whether you consign it to an auction company like Heritage, you're hoping that someone's going to come along and they're going to pay more for that item than you did originally. That is the very definition of the greater fool theory. Always remember, any alternate asset class that works with no underlying cash flows is only propped up by the greater fool theory. There's going to be more about this in other videos because I'm seeing a lot of young individuals are making the mistake. They're putting a lot of money in collectibles. They're putting a lot of money in cryptocurrency, Bitcoin, and precious metals. And they're completely ignoring the stock market and real estate. That is a major, major mistake. That is a major miscalculation that they are going to learn to regret because they're not going to have the compounding power of their money work for them, especially at such a young age. If you put $10,000 in an S&P 500 index fund when you're like 21 and you hold it there through thick and thin for like 20 years, you know what potentially that can grow to? You're going to have a lot of money. Believe me, compounding interest is a beautiful thing. When you invest in speculative assets like this, again, guys, no underlying cash flows. There's no such thing as a blue chip collectible, not even a Detective Comics 27. Thanks for watching. Have a great night. Let me know your thoughts in the comment section below.